Hi, and welcome to the Stock Scores Market Minutes for August 1st, 2016. Let's talk about trading with a process. Most traders focus on their rules for entry. They're worried about when to buy, when to short, that sort of thing. But what is often overlooked is the process to find the stocks that fit the rules. And that is really equally, if not more important. You know, a trade may not be worth taking if you find it too late because the opportunity gets priced in as the stock goes up, or in the case of a short, as the stock goes down. It's important to have a mechanical step-by-step trading process that allows you to capture the trade when it is a valid trade, not with the benefit of hindsight or much farther into the trend and that sort of thing. We can utilize technology to make our process work better for you. We have to be efficient so we find the trades at the right time. All right, let's get into this week's analysis. And what really stands out on this short-term chart of the S&P 500 is the narrow trading range we've been in for the last little while, a couple weeks. And that is, after the big run up, pretty normal. Didn't have a pullback. And so we're basically just consolidating the gains that have come through the month of July. Healthy, but kind of boring. And we've got some individual stocks that make moves, but they tend to make a one-day move on a gap and then go sideways. And so it's not a great trading environment right now. You have to be very selective in the opportunities that you take. There are opportunities out there, but you just have to be patient and wait for them to come along. On the longer term chart, of course, we broke through that resistance there. That's a bull signal, and we're just kind of stuck in that narrow range right now. To me, it looks more likely that we're going to move up from here than down, given that we've been building a nice base, given that we've got rising bottoms into that base building. So I expect the market will move higher, but until we see that breakout of that trading range on the short-term chart, I wouldn't get too excited. Here we see a little more price gain in the smaller caps. Money is starting to look for some risk, and that is meaning the trickle down of capital into the smaller cap stocks. That's good for traders because those smaller cap stocks are usually more profitable to trade. On the Canadian side, we're also in that narrow range, a little more volatility there, but not a lot. Pretty much a narrow trading range also in the TSX. And of course, with weakness in the US dollar, which we saw at the end of this week, that gave a little bit of a lift to the gold stocks. And energy looks like it may finally reverse after some weakness. We'll talk about that in a moment. Here we have the longer term chart of the TSX. There you can see that flag break that we talked about 3 or 4 weeks ago. And, just quietly trickling higher. Summer markets are like this. They don't usually give us a lot of excitement, but there will be opportunities that come along. Here we are on the TSX Venture, nice linear upward trend, a little running away from the upward trend, just as we did there and there. That means we probably quiet down and go sideways, could pull back a little bit like we did in the month of June, but a positive looking market, certainly one that you can continue to look for opportunities in. On the Treasury side, we have our upward trend line like this. We really ran away from it, and then we pulled back for a couple of weeks, but this week rallied again after the Fed said that, no interest rate raise. Treasuries continue to go up, which means interest rates going down. The market's starting to think that maybe interest rates will go up perhaps in September, but no real sign of that yet. On the US dollar side, we did have some pretty good selling pressure late this week as the Fed did not do anything to raise rates. That, of course, is bearish for the US dollar, and we get a little bit of a pullback there. Still stuck in this pattern. Kind of a descending triangle. We rallied up to the upward or downward trend line, pulling back. I think we retest these lows right here, and that is supportive for commodities. On the gold side, there you see the lift in the gold price on that news, and of course, inverse correlation between gold and the US dollar, and it looks to me like gold and gold stocks want to continue higher, although there's going to be lots of volatility in them. It's interesting, the USO, which is our oil fund that I like to use. There's a few different ones. This is one I prefer. It's been moving lower for the last 2 months. And right now it's really quite far below the trend. We're kind of at the bottom of the channel here. So short term, it wouldn't surprise me if we get a little bounce back, especially with that weakness in the US dollar. But this chart is a negative one. I think it, maybe a short-term bounce, yes, but longer term, the trend is still down there. And looking in the big picture of the long-term, 2-year trend, we are still in a downward trend. So I want you to be cautious with the oil stocks. Now, fear, really not a factor. We're just moving to the new lows on the VXX. Of course, there's always time value decay. So the fact that we're here compared to the support here, it's not really the same thing. These are kind of the same levels. In other words, this is really the same as this because this particular fund is based on futures, and futures have time value decay, so they lose value over time. On the actual VIX index, which is a double saying because it's the volatility index, the VIX, is really at the same lows that it was back in June, which is the same lows that it was back in April or middle of April. So don't read too much in the fact that this is two new lows. It's basically no fear in the market, real complacency among investors. So my ratings then, U.S. stocks, bullish in both time frames. The short term, I could have made that neutral because we've been in that sideways range. But given that the trend into that sideways range is up, I opted for a bullish rating there. Canadian stocks, similar story, bullish on both time frames. Gold, bullish on both time frames. A lot of volatility in the gold and gold miners, so you got to be a little bit cautious with that. And bearish on both time frames in oil. Yes, oil is oversold, due for a bounce, but there's not been a good sign of that yet. Perhaps that'll come this week. Stocks continue to, I would say, drift higher. They're not going higher with excitement. They're drifting higher as all of this cash that exists in the world is looking for a place to land, and that money is preferred to go into the North American markets. The optimism is returning to the lower price stocks, which is good. Widely overlooked during the post-Brexit bounce, but now we're starting to see some money to come back into those. Oil is oversold and due for a bounce, but stay cautious with it because the trend is down. Gold looks likely to continue up, and there's really no fear in the market right now. Well, that has been the Stock Scores Market Minutes for August 1st, 2016. Have a great week in the market and trade well.